A strong foundation, steady growth, and dividend payments are just a few reasons why I incorporate ETFs into my portfolios. Welcome to my channel. Today, I'm going to share 4 ETFs that I hold in my taxable accounts as well as in my daughter's accounts. Some other reasons I incorporate ETFs are diversification, exposure to lots of different sectors, and simplicity in building my portfolio. So let's get started with some definitions. What is an exchange traded fund? A pool of investments, basically a basket of stocks. It gives you exposure to hundreds, if not thousands of different investments, different companies through one investment choice. Expense ratio. So for these type of funds, there will be a fee associated with it, and that is the fee that is charged for administration and other operating expenses. So you'll definitely hear me mention that throughout this video. Dividend. Dividend is a distribution of a corporation's profits. Basically, a company shares their profits with the shareholders on a monthly or quarterly or even yearly basis with the hopes that they will reinvest those dividends into the company. Dividend yield. So as I mentioned, the dividend is the company sharing its profits with you. This is the calculation on how much they will be sharing with each of the shareholders. So those are some things to weigh when you are picking an ETF to invest into, as well as the share price and obviously the performance of the fund. So when I started investing for myself, for my daughter, outside of my 401k, the way that I invest today, I was choosing a lot or all individual stocks, but I have shifted my focus and incorporated some ETFs for simplicity and diversification and all the things that I've been mentioning. I wanted to share this because I'm often running into or talking with people that are 100% into crypto. One person I was recently talking with, as well as a few people that are 100% into individual stocks, usually Apple, Amazon, Nvidia, Tesla, those type of things, which I also have in my portfolio. But I wanted to share this because I also incorporate these type of investments. Let's start with SCHD. It's the newest addition to my ETFs in my portfolio. So we're 20 weeks into the year so far, and I have 7 shares in my portfolio. I am up 3.52%, and my average cost is $77.27. So let's take a look at the fund price right now. And this is the Schwab US Dividend Equity ETF, and it is currently $80. Year to date, the fund is up 4.32%. So this is a very popular fund. It is known for having a generous dividend yield of 3.4%. It's not a tech-heavy fund like some of the others that I'm going to share with you. So it gives you diversification into other sectors that you may not have exposure to in your individual stocks. The fund requires a 10-year of annual dividend increases. They have a complex scoring system to rank the funds that are included, and they're striving for quality along with dividend yield. And because this is a managed fund, the funds are evaluated and added and removed by the fund managers. Next on the list is SPHD, and it is Invesco's S&P 500 High Dividend Low Volatility ETF. And this investment, as well as the others that I'm going to share, I've been investing into since 2022 and prior. I'm currently up 9.35%, and my average price is $41.55. Let's take a look at the current fund price is $45.34. Year to date, the fund is up 5.20%. So SCHD, which we just went over, number 1 on the list, pays quarterly. This SPHD is the only one that pays monthly, and it gives broad exposure to the large cap value segment of the U.S. equity market. Sorry, I jumped on to SPHD without showing the top holdings. So let's just rewind here for a minute and take a look at that. So It gives you exposure to many different sectors. Let's see which ones are the highest. We have financial, healthcare, industrial, staples, and energy. So the top 10 holdings are listed here. So in the top 10 holdings, we have Pepsi, Coca-Cola, Pfizer, Verizon, Texas Instruments. There are 103 different holdings within this investment choice. Now let's take a look at SPHD. So again, you're getting exposure to a broad amount of different sectors. You have utilities, real estate, staples, healthcare. The top 10 holdings here include AT&T, Kinder Morgan, and Altria. Are 50 different holdings in this fund. So next up is VTI, the Vanguard Total Stock Market Index Fund. This is a holding that I have in my portfolio as well as my daughter's, and is a daily investment that I make $10 every day, which I just did a separate video about that. I'm currently up 21.53% in one portfolio, 25% in another, and my daughter's up higher than me on both. She's up 29.56%. So this is an investment choice that gives you exposure to the entire US stock market. And it gives exposure to many different sectors, but this one is definitely more tech heavy than the others that we've looked at so far. This gives you exposure to 3,726 different companies through this one investment choice. And their top holdings include Microsoft, Apple, Nvidia, Amazon, Google, and healthcare company Eli Lilly, which we've been hearing a lot about lately. Okay, so last on the list of my 4 ETFs that I am investing into in my taxable accounts and my daughter's account, the Vanguard S&P 500 ETF, which gives exposure to the Fortune 500 companies in the US. So the current fund price is $485.97. I am up 20.62%. My daughter's portfolio is up 30.83%. I've been working to get VOO to be a higher allocation in my growth portfolio. And right now I've gotten it up to 18.5%. My average price is $402.71. It pays a quarterly dividend along with VTI and SCHD. And the top holdings are going to be the same as VTI. But as I said, this gives exposure to the Fortune 500 companies. The actual number of holdings is 509. And that's because there is some funds, for example, Google, that has a Class A and Class C. So as I said earlier, this particular fund is weighted by market cap. And right now, the tech companies are the ones that are dominating. So they are going to be at the top of this list because they are the top performers. But in time, this can shift. And just like with all of the other funds that I shared, they will, whether it's based on market cap or other criteria that the fund managers have, these funds will change and rebalance over time based on those different factors. Those are the 4 ETFs currently in my portfolio. A little bonus content for this video, an alternative that you might want to look at to VOO is SPLG. So as I said, I started investing into the funds that I mentioned, most of them, several years ago. This one was not on my radar back then, but SPLG also gives exposure to the S&P 500. It has an expense ratio of 0.02. It has a dividend yield in line with VOO. It will have the same type of performance, but it also has a 62 per share price point. So make sure to subscribe to the channel if you're not already, like and leave me a comment. Let me know, are you incorporating ETFs or index funds into your portfolio? What's your favorite ETF for growth as well as the dividends? Check out my investment links in the description and pins in the comments if you're ready to open a new portfolio. Thanks for watching. Okay, bye.